This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, June 19th, 2015. Euro dollar. So the euro has now come to a bit of an inflection point, with the market trading up to the 1467 May 15th high, and a break and close above this level would open the door for a more significant medium-term correction in the euro, exposing 120 further up. However, if the market can't break and close above 1467, this will keep the immediate medium-term pressure on the downside and suggest the market could be poised to roll back down towards those recent lows at 108.19, which guard against the critical 2015 and multi-year 12-year low at 104.62 from March. Sterling dollar. So cable is rallied up with the market breaking to fresh 2015 highs and inching and closing in towards that critical psychological barrier at 160. At this point, the market is looking a little stretched, but we still could see a push towards 160 before we see any signs of short-term pullback. Any setbacks, however, should be very well supported now in the 155.50 area, which represents some previous resistance now turned support, and only a break and close back below 155.50 would put the pressure back on the downside. Dollar yen. So dollar yen is in the throes of a bit of a correction since stalling out those multi-year highs the other week at 125.85, and there is still risk for deeper setbacks towards the previous resistance turned support in the form of that breakout level at 122 from several weeks back. At this point, though, the structure remains highly constructive, and any setbacks that we do see towards 122 should be very well supported. Euro Swiss. So Euro Swiss maintains its recovery outlook, with the market being very well supported in the 104 area, and fresh upside is projected back above 105.75, which will expose a retest of the February 2015 peak at 108.15 further up. Aussie dollar. So although we've seen some mild gains in Aussie in recent trade, the market is overall locked within a bearish consolidation, and any rally should continue to be very well capped below 80 in favor of an eventual bearish resumption below that recent multi-year low from 2015 at 75.33 and towards the 70 area further down. At this point, really only a break back above highs that we saw going back to the 14th of May at 81.63 would compromise the outlook. Dollar CAD. So although we've seen some intense setbacks in dollar CAD in recent trade, the market is still looking to put in a higher low above that low that we saw going back to the 14th of May around 119.20. At this point, really only a close below 21.50 would compromise the constructive outlook, while the market is looking for that higher low in favor of a fresh upside back above 23.50 and towards recent highs in the 125.65 area. Ultimately, this market is favored back towards a retest of the 28.35 2015 peak, and really again only a close back below the 21.50 area or below Thursday's low, which comes in at 21.27, would compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi remains under pressure, with this market having put in a fresh 2015 and multi-year low this week at the rate of 68.79. And deeper setbacks are now seen eventually down towards the 65 area. At this point, any rallies are viewed as corrective, and the market should hold below recent highs that we saw going back to the 10th of June at 72.32. SPX 500. So the S&P 500 has once again managed an impressive bounce after being very well supported on a dip, and the rally has taken us closer to that February peak, that peak that we saw, in May, that record high peak in May at 21.37. At this point, though, the market would need to break and close above the 21.37 May record peak to open the door for fresh upside, while inability to do so will suggest that the market is still chopping around in favor of the possibility for the formation of a major top and bearish reversal. However, we still will need to see ultimately a break and close back below 2040, the low that we saw back on the 11th of March, to confirm a toppish outlook and accelerate declines. Gold. So gold continues to be very well supported above 1170, which represents some internal support on a daily close basis. The market hasn't been able to close below 1170 over the past several weeks, and this has opened the door for a fresh upside back above 1200 in recent trade. At this point, key resistance now comes in at 1232. That's the high that we saw going back to the 18th of May, and a break there will really strengthen the basing outlook and open the door for an acceleration towards 1300. However, if the market does break back below 1170, this would put the immediate pressure back on the downside and expose a retest of the 2014 base at 1131.